Seattle area. So it is 8:30 local time. Usually we do this on Central Time, so it's a couple hours earlier over there. And it's May 13th, so I hope everybody had a great weekend from this weekend, Mother's Day and all that. And we'll kind of get into the markets right away, and we'll see what's happening. So where I had the title was, did the market just do a double top, and is that it? So what we can be seeing is, here was that double top I speak of. And for those of you who are familiar with me and how I trade, we've got the Moxie indicator, and you can see that we've had negative divergence. That's assuming I can draw a straight line. But that's what we're looking at. And as of today, the Moxie indicator has now gone negative. So this is something I have been projecting for quite some time. And you can see that the overall trend, while price has been going up this entire time, the Moxie indicator has been going down and down and down. So this has just been a lack of energy. It's just been kind of running out of gas is how I talk about it. The height of the indicator above zero is how much gas is in the tank, and we are now out of positive energy gas. And that's kind of one of the ways that I look at it. Now, one thing I wanted to talk to you all about, because we're getting into building out my brand and everything, we've got a couple social media things that if you guys want to come join, come check out. It should be pretty neat. And we've got my Instagram page up here, so we're going to be posting some links, so you don't have to worry about memorizing this or anything, but basically Profit Pilot is the name we're going with, so you can see I'm a pilot. We actually got some cool fun stuff up here. My dad built this airplane back when I was like 5 or 7 back in 1990, finished in 92. And so I've grown up in this airplane, and this is up here in Washington. We were just filling it up the other day, and that's the fun one that we get to go do some tricks with. And then we got over here, we got the Facebook page, and then we can keep moving around. We got Twitter, and probably Twitter and Instagram probably be the most fun I like, but Facebook also allows us to do a lot of good stuff. And then I thought this one was pretty funny. Look, the market went up again, right? Well, careful. We might be getting into some tricky waters as we're getting into this. Another couple things that I wanted to talk about, and this has been some news that has been going on. I think that right now it's a good idea to understand what is happening out there, that the Fed is putting out a lot of money, all sorts of stuff are going on. And so while we might be looking at the market and saying, how is this defying gravity? What is going on? This doesn't make sense based on news. This doesn't make sense based on the economy. That's true. That is very true. And us as stock traders, we are just going to have to trade the charts and almost, just know the news, know the information out there, but don't really lean on it too much, because there's a disconnect between that, and the news that comes in will not necessarily happen at the same time that the market will respond, and vice versa. And just understand the strong forces that are at work there. One of those forces is that the Fed, not only have they been buying bonds and buying assets and expanding their balance sheet and all that kind of stuff, they've now, as of yesterday, this was yesterday, said that they are going to start buying corporate bonds. Essentially, they're going to buy ETFs that hold corporate bonds. This is unprecedented. They have never done this before, and some people are debating legality of this, and so we need to kind of be aware of this. And so what they're doing, you can see here, is that the firm BlackRock will be doing this for them, and $75 billion in equity from the Treasury, and they can leverage it 10 to 1, giving it basically $750 billion to play with. I mean, that is almost $1 trillion. So just be aware of that. And we've already put in $5 trillion. So kind of read this article if you want to. Go do some of your own research. Just understand what's happening out there. And then the other situation, I'm going to come over here and get some pop-ups. Now, this is only passed in the House so far. It's going to have to go through the Senate. So we don't know if it's going to happen. It might happen later. It may not happen at all. But it's good to, again, know that, well, the House is unveiling a $3 trillion, another coronavirus bill. So there might be more money coming at some point, which could spike the market again. We could be getting ups and downs. We could be getting a trend down, and then this news comes out, and it could throw things off a little bit. So don't get too heavily on one side or the other of this market. Be nimble, be quick. I've been having to change the time frames that I use. I tend to really like the hourly chart to trade. Well, I've been having to go down to the 15-minute time frame in order to catch some of these trades, and I'll be showing you some of those things. Yeah. And if you guys, I talk about this a lot, but if you know any friends that have been trying to trade and they're kind of struggling, bring them on over, show them this stuff, bring them over to Facebook, have them watch these videos of ours. We're here to help. This is a very difficult, trying time, and kind of between all of us here at Simpler, we're helping people figure out how to navigate the market and how to just make some money and be defensive about this. Eric, good morning. Good to see you. Teresa, always a good time to see you. Let's see. Okay, what makes the Moxie indicator better than any other trading methods out there? You don't have a great answer. Yeah, I know. Basically, what I would say is the proof is in the pudding. And for me, I spent a lot of years following other people and trying to figure out how do we trade and how do we do this. And none of the indicators really worked for me. What you should do is actually yourself and your wife go find one of the webinars that I've done. I'm actually doing a webinar tomorrow. Tomorrow on Talk with Traders, I believe is the website. It's a buddy of mine. And so I'll be doing my webinar there if you want to come check that out. Otherwise, I've got some recorded ones out there. Basically, as I said, proof is in the pudding. It's really consistent. It's reliable. Helps me see it. And you just got to kind of look at it. But you know what? It's not for everybody. There are different trading styles and methodologies out there. And you've got to find what works for you. And it worked for me, and I think it resonates with a lot of other people, and I try and be as cut and dry as possible and really explain the why. I'm an engineer. I need to know the why, not just do this, do this. I need to know, like, why is that doing? So as you can kind of see, you'll start to pick up on what I talk about. And one of them was the Moxie indicator here. You can see here's how much energy, how much gas we have in the tank. And we keep draining that gas as price keeps going up, and that's the negative divergence. So yeah, Eric, thank you very much. Appreciate that. And I'll keep going through. The other thing you see here is on the 15-minute time frame with the S&P. See, we've been going up for the last, few days. Notice that the Moxie indicator kind of went up and then started to roll over. And that ultimately, as far as the negative divergence, was lower than that. So you could see as price kept wanting to go up, it kept doing it on less and less energy. Now, I will show you a couple other things. Take a look at the Qs. And I have been telling my channel and anybody, here we go, who would listen, that something is going to break here, because this is going to be challenging, and this can't sustain. All right, let's get the computer up running. I'm asking a lot from this computer. It's my trusted laptop that I've had for many years. And let's go. All right, so the biggest thing that I've been seeing with this on the Qs. Now the Qs and the Apple. Hey, Sarah, can you pop George off, please? Get him off the comments there. All right, so with the Qs, what we're looking here is that we have been having such a good move up that basically price has gotten away from the hourly 50 too much. It became unsupported, just absolutely unsupported. And we can see that also here on the 15-minute, we got price moving up and up and up, and it's been following the 15-minute 50 pretty well, but notice that the Moxie indicator was not supporting it. So basically, the price kept going up, indicator was flat, it wasn't negative, so at least it was saying, hey, I'm neutral, I'm coasting up, we're doing all right, and but it was not supporting. We want the indicator to be going up with price if this is going to be a good, solid move like that. And then you can see is price just became unsupported. Like there was this big gap. And for me, the way that I trade is that price generally needs to follow the hourly 50. And when you could see that there was too much of a gap, it was going to come back down at some point. When was that going to do it? Hard to kind of tell. Yesterday, I kind of put it out there to my channel. I was like, I think something happened yesterday as the difference. So let's take a look at that. You can see here on the 5-minute, right here, we not only had a double top, but price also got underneath the 5-minute 50, which was very different than any other time. You see here in this entire run, price basically, maybe it would dip below the 5-minute 50, but then it popped right back up, and it kind of stayed, in this nice trend, did that. And if you look, yesterday was different than all the other days. And I looked at that and I said, I think something's happened now. Now, did I know that the rest of the day was going to happen? Did I know that this thing was really going to, keel over like this? No, we didn't know that. But where it did do that was, and I'll zoom in here on the 15-minute as well. Right here. That zooming in, let the computer catch up. There we go. It was when price failed the can't zoom. There we go. 15-minute 50 And then the real one happened right here when price fell off of the 5-minute 200. So this is what we're going to have to do. We're kind of having to look down at lower time frames just because these moves, like we aren't in enough of a trend in order to really look at the daily or even look at the hourly too much. They're important and we can determine some stuff, but really some of this stuff, as far as the really nitty-gritty details, is going to be down on the 15, the 5, maybe even 2. I don't use the 2 too much, but it's down there. And you can see here that price was following the 2-minute 50 all the way down. So, if you guys are into that, you can do this. Eric, to your point as well, if you like to day trade, the Moxie indicator is really good on any time frame that I have it built for, which is the 2, the 5, the 15, and then on the way up. And it's things like this that we can see. You can see here, this is what I call a inverse trampoline move. When price is above the 50, but the Moxie indicator is below 0, right there. Richard, I'm sorry to hear that that's a little blurry. I've at least increased the font, so the font is as good as we can do, and this might just be a matter of how much rate that we can get out here. I actually just bought a new router because my router was blocking me on one of our class segments. So yeah, let me kind of get into that. And then for new people coming in, just because I want to keep making sure we update all this, we've got some new social media profiles that I want you to be aware of. Come over here. We've already posted them in the link. I'm sure we'll do it again at the end of the session. But Facebook, we got that, Profit Pilot. We've got Instagram, so if you guys want to come on over there. And let's see, we got this last one that my dad and I were up doing. So up here in Washington, basically Seattle area, kind of Tacoma, this is typical weather. In fact, it kind of looks like that right now. The sun kind of comes and goes, but typical weather, pretty nice rainbow right there. And I thought that would be a nice little something to take a picture of and post for you guys. So that was fun. And then we get over here, Twitter, always an amusing one. So I was kind of laughing at this one when we got that put up. And then, yeah, so we got those. Now let's look at kind of what is working right now. Now I think I've spoken about this the last couple days, kind of looking for an entry. And I think that with the market sending a signal that it may have double topped and we might start looking things rolling over. And then Jerome Powell, I've got a note here, Jerome Powell has actually come out and he said, I'm not sure that we're going to have a very speedy recovery, that this might actually be challenging, that this isn't going to come back right away. So he's having to start to admit that he thinks that this isn't going to just, oh, we're going to open back up and we're going to rebound again. The other thing that we're going to be seeing about this is the, well, I heard that California, some sectors, some cities of California are going to be under lockdown for another 3 months. Wow. That's extreme. That's basically all summer. And I don't know how people are going to be cool with that or what they're going to be doing. And I don't know what kind of, say, civil unrest that might even do. And I think that was the news that kind of came yesterday that helped to roll over the market, that some cities are looking at staying locked down for 3 months, another 3 months. So kind of just understand what's going out there, but really all the information we need is going to be in the charts. That being said, I started looking at some defensive stuff, like where are people going to go when the market gets messy and where can they invest? Gold, silver, Bitcoin, we've been seeing those things really take off. So if we look here, we can get into GLD. And Teresa, I've been telling him that you and I have been talking quite a bit. So yeah, thanks for saying hi. Daily chart looks great, right? We got the 8 over the 21. It's basically an uptrend. Moxie indicator is well above 0, and we've got a squeeze. So it's consolidating, kind of tightening up, waiting for it to pop and explode. And then on the hourly chart, now the Moxie indicator isn't quite there, but in this market, we're kind of having to kind of give and bend a little bit. But basically, I do like that price is coming into an uptrending hourly 200. That's usually a fairly strong moving average, so I'm willing to kind of take a stab at it right here. And we've been seeing that this has been trending up. And then yesterday, and again, so Eric, I'll kind of pick on you for the day since you've asked a specific question, like how do I tell my wife that this is different than anything else? It's just the combination of everything and how I teach it. So bring her on board. Let me know if the explanations are good enough. And this is what I'll show you. And it comes down to precision. So for me, I really need something precise as kind of the engineer, right? I don't really work well with, oh, well, it kind of got to this range, so buy this range. It doesn't quite work for me like that. Yesterday on GLD, you see how price basically bounced off of the 15-minute 50 and notice that the Moxie indicator was above 0. looking really, really good, like right there, looking pretty good. That's different than any other day. Do you see anywhere back here to where price had actually touched and bounced off of the 15-minute 50? It didn't happen. It didn't happen. And not only did it bounce off the 15-minute 50, we now have the 15-minute 200 up. So I went in first thing this morning. Looks like it's doing all right. Now I'll take a look at SLV next as well. Yeah, Brian, I know. Like, we don't know what we're going to be getting into. You know, people are not very happy about this whole quarantine situation and being told what to do. I mean, this is America after all, and we don't take that very well lightly. I mean, look at Elon Musk and what he's doing with his company and kind of saying, I'll put in some rules and some procedures and stuff, but, you know, we got to open up and do all this. So BTI, let me get back to that one because that's actually a good point that I was going to show, and let me get back to the S&P for that one. He's asking, or the person's asking, you know, would you just go long when the Moxie indicator goes green and then when it goes red? Essentially, yes. In this market, though, you got to be a little careful with that because it is just an indicator, it's just a momentum-based indicator, and price will do different things. So generally, with silver, I'm looking at price coming into the uptrending hourly 50. The daily chart looks great. We got price flagging here, 8 over the 21. Moxie indicator is almost crossing 0, but it's coming up. We've got a squeeze as well. We've got a squeeze on the hourly chart. Moxie indicator is above 0. Basically, everything's positive. And I have seen price dip on the 15-minute time frame there. And then we had a quick little shallow dip right there again. And I'm looking closely. The indicator isn't quite there yet, but I think that I want to get in here. I want to see if price at least holds the 15-minute 50 now that it's right there above 0. So everything looks like it's coming in to where I want. We got another squeeze on the 15-minute time frame. I'm looking at all these things and I'm just thinking, well, if gold's starting to take off, silver looks pretty good, and I at least want to get in and give it a shot if this thing starts to work out. If it rolls over, fine, you get out and then you try again. I've had to do that with dominoes to kind of really find that exact way to get in. And then GBTC. So GBTC is the ETF for Bitcoin. Make sure you kind of also look at the underline, which is /BTC, and I liked what that looked like also. Yeah, I've heard that some of the southern states are kind of like, we don't really have a problem here, and we're going to be opening up. I would imagine, you know, I do. So William, to your point, that's why I do like the idea of states. I like that we have the federal government, but then I like how we have our states, and then we have our local governments, and that we basically take power and control and we keep reducing it to smaller and smaller groups and entities, because I don't think that society does well with just one giant overarching way of ruling. I think we do well based on smaller individual groups trying to figure out what works best for them, and I think that's what we need to look at. And so I like that there are different states that are opening, other states that maybe aren't, and I think it depends on everybody's locality, and I don't think that there is one something that fits for everybody or every location. And I think that's why we need to, I like the idea of states and states' rights. All right, so all that political stuff. Anyway, so GBTC took off a while ago, and it didn't quite give me an entry that I was looking for. And sure enough, it finally came back down to, you know, this level that I was looking at. It did what I call a trampoline move here. Price dipped below the hourly 50. The Moxie indicator is still above 0. So Eric, once again, I'll pick on you. That works because it's what I call a trampoline move. It means it's buoyant. It means that energy, that the momentum is still positive, meaning that the Moxie hourly chart is still above 0. So anytime price dips below the 50, it should bounce right back up because of the buoyancy. Momentum's still up. Like whatever price is doing, momentum is still up. So I saw that and I said, okay, great. I don't really want to buy right there. I want to see confirmation. And for me, confirmation comes down on the 15-minute time frame. So you can see yesterday when that thing finally dipped, it did reverse. There we go. It did reverse right here and then bounce, but I don't want to go long just when price crosses the 15-minute 50. I want to see it test the 15-minute 50 to confirm that price wants to go up and that it's using that moving average for support. So then you get here right there that price has bounced off the 15-minute 50. So I go in because everything started to line up the way I wanted to see it. I know what I'm looking for. I just have to wait till I see all the things I want to see, and I do it from the daily to the hourly to the 15 and maybe below if I want to do that. All right, then let me go back to the SPY because BTI 2270, I want to show you this. It's kind of interesting. Yeah, Jonathan. All right. Yeah. Yep. I'm with you on that. All right, take a look at this. So BTI. See how the Moxie price trigger right there went green? And see how the Moxie price trigger went red right there? How's that? How's that for a trend? And Eric, how about that? So, generally you can go long there. I went long on this dip because that's a trampoline move for me. And then basically I've been saying I can't short, can't short, can't short until we now start seeing this. Now, I'm still not shorting today, although, boy, I guess the market's falling apart more than I thought. I was expecting a little bit of a bounce. Keep going down. But there you go. Green to red. There's your trend. And the Moxie indicator basically caught all of it. Now let me kind of take a look at a few. ONEM is one that I am in. Glad you're being a good sport. All right, so ONEM, I am in this, and it has earnings later today. It looks like a great stock, but boy, with this market, whatever it's doing, it's ripping down a lot of things here. But so far, it should be good. The only concern I have is earnings. I don't like to trade in earnings because I just never know what earnings are going to do, because it's a giant crapshoot on that. It's the biggest news event that a stock will have, and you just never know what it's going to do. But the rules are that price, as long as it stays above the 15-minute 50 and the Moxie indicator stays above 0, it should be good. And it also hasn't really moved. The fact that it is basically held stable despite what the market is doing right now should be a good indication for the strength of this stock. That is some of the stuff that you kind of have to just look at things and say, oh, okay, I see what's going on here, and it looks fairly good. Another one was Domino's, DPZ. There we go. It too should be good, but we're having to be very careful and cautious with this market. You think about all those people in California, if they can't get out of the house, maybe they do Domino's delivery. And so Domino's at the time was a pretty good, say, Corona or COVID defensive stock. I got back into it. It seems to be doing well. The only thing I can kind of say is maybe why it's not screaming right now, and same thing with ONEM, is that price is starting to get a little too far away from the hourly 50. Price usually likes to follow its moving averages. And so until that gets a little bit closer, that might be an issue. But on the 15-minute chart, just like ONEM, price is over the 15-minute 50, and the Moxie indicator is still above 0. So I don't have an exit yet. I would like to make sure I capture and keep the money, but it's doing all right so far. So there's kind of nothing to really be too worried about. And Wagger, I only look at the pre-market overnight session basically in the morning before the market opens, just so I see where things are and what happened in the overnight. I don't actually use it for any kind of trading purposes. I just want to look at it and say, okay, what happened overnight? And I can look at the futures to do that too. But I like to see what the action was compared to the charts that I know, and the charts that I know are based on regular trading hours. And then when it comes to individual stocks, I look the same thing too, based on what position I'm in. That way I'm not surprised by an open. I at least like to kind of look behind the curtain and see, hey, what's going on there, and what's going on, and what's happening. Another one, let me show you Apple, because Apple has basically been the Qs. And this one, not much of a surprise either. What I've been telling people here, and then we'll get this one too, and we'll get this. The 15-minute wasn't as clear, but let me keep this zooming in. Let me see if my computer's catching up on me. There we go. All right, couple things that were really telling me things were getting overbought, and I was using Apple as a guide, as a proxy for that. Number one, we have this big chunk of resistance right there, back at 320 price. That's a big area. You can just think naturally, forget indicators, whatever. Just when price gets up to that, there are a lot of people up there probably hoping just to get back to break even, and then they get out. So that's just going to be a natural area of resistance. And where is price currently? Basically right there. So that was kind of something I was looking at. I was like, that's probably going to be an area that price isn't going to just be able to keep pushing through. The other thing I was looking at is price really got overbought. It started going outside of the third ATR on the daily chart. That is significant. The other thing I noticed on the hourly chart, price started to get into the third ATR on the hourly chart. Again, Great if you're long, but boy, you got to look at this thing and say, how much longer is this thing going to go? Because it is really on fire. It is hot, hot, hot. And that's going to be a problem at some point, because at some point, people are going to want to cash in and say, I'm not buying that. That thing is way too up. The other thing is, look at how long price had not touched the hourly 50. Price had just been off the hourly 50, unsupported, floating over that moving average. It just is unsustainable, at some point when you look at that. Another thing that I was looking at, but this is more like for the indicator and stuff, but notice how price kept going up, and notice the indicator is down, so those are negative divergence. The other thing we could do, another view that we could have with that, was price up and the indicator kind of not matching. So again, that was the same thing I was talking about on the 15-minute time frame previously with the SPY. It wasn't matching. And then the other thing is, and here's how it was really seeing that this thing was getting overbought and way too hot, that since the last time this thing had bounced off of the 15-minute 50, it had not touched the 15-minute 50. And that doesn't happen very often. The 15-minute time frame is low enough that when price moves well, it tends to follow the 15-minute 50 very well. And when it gets so quick, so eager, whatever, that it doesn't even touch the 15-minute 50, like it's too far above it, it is really getting too overbought. So I kept telling people, I was like, this thing is going to come back down hard at some point. And then you could also see negative divergence, price up and indicator flat. So the fact that it was going higher and higher and higher on no more energy was a form of negative divergence that we were looking at. And sure enough, this thing just started to roll over and break. And then as of, let me get over to the other time frame. And then, there you go. And then you can see it got underneath the 5-minute 50, and then today continued to get rejected by the underside of the 5-minute 50. So that is how we keep watching this stuff go down. Yeah, ghost. That's another thing I'd like to talk about as far as what's going on with the rest of the market. Has anybody looked at what the Fed's balance sheet is doing? So just be aware of that. They're putting in a lot of money. Understand that this rally is not a real rally. It's basically just quantitative easing. It's the government putting in a bunch of money and saying, just go buy things. Don't let anything go down. How long can that happen? How long it can be sustained? We don't know. We can also look at, where is it? The put-call ratio. So if we look at this is another concerning situation. The put-call ratio yesterday, look how low that thing got. Okay, very, very low. There was a single print, but overall the moving average for the put call has been very, very, very low. So be aware of that and understand that there are just some mechanical things out there that say, hey, you need to be really careful to the long side, and probably we're going to roll over and change directions at some point soon. So that's going to be about it for me. Let me wrap up. Remember to go out there. Thanks for leaving comments. I love talking to you guys. Let me know. Come check out the social medias that we have. Go sign up for this. We kind of put a lot of stuff on there. There's a lot of things I like to do, and you kind of get a little insight into my life. We got that. That's the Twitter. We got Instagram. Some good fun pictures like that. We had May the 4th the other day, and then that's my mom out on our deck for Mother's Day. And then we got the Facebook thing going too. So come check that out. We'll be posting some links out there. Thanks again for everybody for tuning in. As I said, I always have a good time. And just be careful out there. It's probably going to get a little messy. I mean, it's been messy, but I don't. something else seems like it's going to be happening coming up. So, everyone, take care out there, and I'll catch you next week.